kind of understand what the psychology is like at the moment. Julia, to you, if we're looking for some key fundamental reasons for selling, I'm looking at some equity valuations in the United States. We're only running modestly above our long-term averages. Look at the 500, 15 times expected earnings this year. That's where we're trading. That's just slightly higher than the 10-year average of 14. Was the sell-off overdone?
I guess if we have a look at the US stock market, the last couple of sessions we've been asking ourselves, is this a dead cat bounce, or are we going to see a buying opportunity come through? And it does look like it's been a dead cat bounce. Valuations in the US are stretched, especially when you have a look at the margin side. We've seen margins, corporate margins, at all-time highs. So there's not very much, there's not a lot of room for US corporates to increase their margins and improve on margins. So what we're probably going to see is margin deterioration coming through. Now, this earnings season is important. As you mentioned, JP Morgan as well as Wells Fargo will be reporting earnings, so financials will be very much in focus in terms of the US tonight. But really, it's a tech sector, it's a high growth momentum area which is being sold off very heavily, and valuations there, well, we see very high valuations. In fact, it's not unusual to see stocks like Facebook and Yahoo have PE ratios above the 100 mark, and indeed you don't have to look too far. You can look on the Australian market. Freelancer has a PE ratio above 1,000. Xero doesn't even have a PE ratio because it doesn't make a profit as yet. So we are watching those high growth momentum stocks to be sold off very heavily on the Australian share market. Instead, if you are looking for bright spots, look for it in the gold space. We're going to see safe haven plays very much coming into favour today. Those defensive areas will probably still be sold off, but will outperform the market. So they're areas like the consumer staples, utilities, as well as the telecom sector. And this has been called a tech wreck 2.0 at the moment. And just having a look at what happened during the big tech wreck in 2000. And this downturn for the US stock market and for the Nasdaq really lasted around about 2 years, from the 10th of March 2000 to the 9th of October 2002. And if I just bring a chart of that period up for the Nasdaq, this is what it looks like. You can see it's a very ugly looking chart from the peak of the market that we saw in 2000 to the low of the market in 2002, which led into a US recession. We actually saw the Nasdaq losing a massive 78%. The good news for Australian investors is that we don't have a huge technology sector here. In fact, if I bring up the Australian share market in that same period, a very different looking graph. And you can see that during that period from 2000 to 2002, the Australian market only lost 9% in that period, and we managed to avoid a recession in 2002, whereas the US went into recession. So all up, we are looking for selling in terms of those high growth, high momentum areas on the market. The defensive should outperform, but we are not expecting to see the same type of losses that we saw in the US, because we simply do not have a bigger growth tech or biotech sector that the US has.
Julia, all very well to flag a strategic review, but you get a job based on what at this level? Simply saying to the board, I'll have a strategic review? Hired, sold. Welcome to the company. I mean, come on. Where is the actual master plan as of yesterday? Never mind tomorrow.
Well, you have to remember that Alison Wilkins only started in the job the 3rd of March, and usually when you see a new head of a ship, what you will see is a clearing of the decks, which we will probably see in the case of Coca-Cola Amatil. Now, we've already heard that the half-year earnings will be down by 15%. In terms of this strategic review, we know where the key challenges are. The core is the Australian market. It makes up about 72% of the business, and here in Australia, around about 50% of the sales occur through the grocery channels, where we see intense competition through Woolworths as well as through Coles. But I think the most attractive part of the Australian business is the non-grocery channels, where we do see fatter margins for Coca-Cola Amatil. Now, typically the growth for Coca-Cola has really come from Indonesia, and we're still expecting to see 10% volume growth for 2014 from Indonesia. But the problem is the currency here and the inflation, cost inflation. If we have a look at the Indonesian currency in 2013, we actually saw a fall of 20%. So that's a major issue. But in terms of valuations for Coca-Cola, it's the cheapest Coca-Cola franchise globally. It trades at about a 20% discount to Coca-Cola Enterprises. Of course, there are reasons for that, but watching that strategic review, because we do have a new head of the company, and when there's a new head of the company, there's usually a new direction as well as a clearing of the deck.
Just in a final thought, Julia, we're seeing some heavy selling in Tokyo to the minute. How much of a problem is that for our market? Looking looking for some signals, looking around the region, finding none.
And that's really going to be the issue. Outside of Japan, we know that Japan's tech heavy. We know that the Japanese yen is a safe haven asset, and the rise in the yen will be bad news for the Japanese market today. So we are expecting to see carnage on the Japanese market. But outside of Japan, how's the rest of Asia going to hold up? Are we going to see outperformance compared to the US stock market? And that might set up a trend, and that's going to be the key for investors today. Bank of Queensland, I guess forget about the results, because we're now looking at a capital raising. Investec, $440 million, a capital raising of $400 million. The shares will be in trading halt until the 16th of April while the institutional component is completed. So investors are going to be watching how much of a discount this capital raising will be done at. It's a great time for a capital raising for Bank of Queensland. The share's up 42% over the last 52 weeks. So great timing in terms of capital raising, but just watching that discount and the dilution of capital to existing shareholders.